What's driving this major pullback?
Hi, Fifi. Thanks very much for having me on the show once again. I think you're 100% right. If you look at the market's performance in the first quarter, the market is up just about 10% for the first quarter, and you seem to have given up about half of those gains in the first 2 months of the second quarter. And I think specifically this week, I think it's been concerns about the US-China trade war. It did seem that we're getting closer to a conclusion before the Trump tweets that we got towards the end of last week, and then the retaliation from China.
All right. How are you feeling though about the period ahead? Perhaps maybe the pullback that we are seeing in markets right now is a repricing of the outcome of a China-US trade deal. Are you confident that we could get one anytime soon, especially as I do understand that there is a deadline on European auto traders and possible tariffs that might kick in for them come midnight?
Yes, so I think you are probably getting closer to a deal. I think, it's been a long path up until now, and I think you are at the stage now where you are crossing T's and dotting I's. And perhaps some of the rhetoric he's seeing at the moment is perhaps just to push it closer to a conclusion, but it may also just be political in terms of trying to get an outcome that provides you with a little bit of political capital, certainly from US President Trump's perspective.
Yeah. So one stock that is going against the grain on the JSE right now is Aspen Pharmacare, skyrocketing 7% at one stage on that announcement that, there's some clarity as to the sale of their infant business. I'm just interested in whether you think that, the bleeding that we have seen come out of Aspen, you guys at one stage putting that counter in ICU is over. I mean, is it better days for Aspen from here on?
Look, I think it's definitely a more positive sign. So the market's been quite concerned about the debt levels for Aspen. So they were sort of pushing towards the 4 times net debt to EBITDA number, which is close to where the covenants were, just given the poor operational performance as well as working capital blowing out. So, the market's really been concerned about the risk of a recapitalization, that you might need an equity injection. But they put forward the IMF deal, which in our view is selling one of the crown jewels within Aspen to try and alleviate some of the pressure that you have from a balance sheet perspective. So, they have gotten the regulatory approval. Now it's up to the two parties to agree the final terms. I think the one thing that you'll have to watch out for, it does give them a little bit of breathing room, but they do have 1 billion euros of debt that is due to mature in July of next year. And certainly, they've got to get those debt ratios looking a little prettier so that they don't end up in a situation where they get worse credit terms.
Sure. I mean, just looking at that share price performance, though, particularly over the past year, it's essentially halved. And I'm wondering, now that we are seeing some positive announcement coming out of the company in terms of, money coming in to settle the debt, is it time to get in Aspen Pharmacare now, or, maybe buy more for your portfolio?
Yes, I think investors are certainly probably starting to lean in that direction. So I think the overhang from a debt perspective, the market's going to wait for the deal to actually finally clear before giving them the credit that, debt ratios will come down. They can reduce their stock of debt. I think it's probably conventional wisdom at the moment that Aspen is trading quite cheap. So even if you look at the multiples it's trading on, Aspen doesn't trade on a single-digit multiple. And certainly it is looking cheap, and I think a lot more sort of value hunters will be certainly looking at the stock at the moment.
Okay, talking about value, I see that the well-heeled, affluent, consumers who can afford your Cartier watches and your Mont Blanc timepieces are choosing to rather buy those things at a click of a button rather than walking into, the stores, the lavish Richemont stores that we know. That trading update coming in showing that, going digital has really benefited Richemont by, looking at the amount of sales that they were able to achieve. A quick comment on that, and whether you think that Richemont will be going more towards the online direction, perhaps closing traditional stores, as it seems that their affluent consumers prefer the convenience of shopping online.
Yes, I think it's an interesting part of the investment case at the moment. So in terms of Richemont's strategy, they're not necessarily betting the farm on online and closing their bricks and mortar. It's more about trying to evolve towards an omni-channel model where you use online as a complement to bricks and mortar. So you'll see on the high-end luxury, consumers still prefer to go into a store, try on that particular good before actually purchasing it. So it's likely that you're going to see that the online channel will complement the bricks and mortar.
All right. And then bringing it back home, MTN Nigeria. I mean, I've just spoken to my colleague Ken, and he updated us that yesterday the share price closed 10% higher, which is the ceiling on the Nigeria Stock Exchange. Today also it's reached that 10% ceiling, trading at around 108 naira or so. What's your take on this, and then whether MTN's dark days are also over and one should be getting in now, given the fact that they also could be seeing better days ahead?
Yes, I think the MTN listing of the Nigeria business is actually quite an interesting development, given that the market has moved to actually putting no value on MTN Nigeria whatsoever, just given the regulatory concerns that you've had, but also previously the currency liquidity concerns that you've had. So the implied value of this this IPO that is a listing by introduction is about $6.5 billion. MTN owns 75% of that. So if you translate it back to per share for MTN, it's about 40 Rand a share. So, with the share currently at 100 Rand or just around about there, that's implying that the rest of the MTN business is trading on a 60 Rand value, which we think is perhaps too low. So the market is still not believing what is, in our view, a crystallization of value by the listing of MTN Nigeria, but perhaps the market, I think, will have to consider some value to MTN Nigeria when they actually reduce their shareholding from 75 to about 60%, which will happen subsequent to this particular listing.
All right. Well, Mila, let us leave it there. Thanks for your time as always.